Hello guys, welcome back to my YouTube channel. My name is Bliss Capital. So today I'm going to show you guys how I cut 5 trades under 11 days starting from June 1st to 11th June. That's the June 11th. So the first trade was on June 1st, jump 25. I cut over 7.74 RR, which is risk to reward ratio. That was the second one was fixed 100 1x over 6RR. The third one was jump 75 over 9RR. That's 9RR risk to the reward ratio. The fourth one was fixed 10 1x, which is over 14RR. The fifth one, which is the last one, is jump 10 cut over 6RR. That's risk to reward ratio. So total of 44RR. So stay tuned guys, make sure you watch till end. So let's start from the first one, which is jump 25. So this was the trade. This is the 7RR. You can see it's 7RR, which is 7.74 risk to reward ratio. So how did I got this trade? I did my top-down analysis starting from high time frame, which is 24 hours. That's daily time frame. So according to the daily time frame, you can see from this side market is bearish, and from this side market is bullish. That's creating a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. All these are signs that market is uptrend. That's bullish. So since market is bullish, what will you look for? We look for demand zone, which is uptrend zones. We look for demand zones. Moving down to lower time frame, that's the 8 hours time frame. You can see market is still bullish according to the trend. You can see the higher high, higher low, higher high, higher low. All these are signs that market is still uptrend. So let's start from another one. We move down to 4 hours, the lower time frame. We started from 24 hours to 8 hours, from 8 hours to 4 hours. So to check if the market is still bullish, you can see market is still bullish according to market structure. Moving down to 22 hours, that's 2 hours time frame. You can see from this place market did from this place market was bearish. That's moving to the downside, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Market did created instead of creating a lower high before pushing to the downside, market did fill this zone. That's market pushed above these two zones, these supply zones. Shows that market have changed trend inside this 2 hours time frame. So market did pushed above all these highs, these two supply zones. That shows that market have changed trend, because the main trend on 24 hours time frame, which is daily time frame, is bullish. So since market has changed trend on lower time frame, which is 24 hours, so I look for buy setup. That's buying zone or demand zone. So moving down to 1 hour time frame, since I've seen that market have changed trend from this 22 hours time frame, market took out these two highs. That's this first supply zone and second supply zone. So market did I moved down to lower time frame. This is the 1 hour time frame. You can see the market took out these highs, these two previous highs. So moving down to 30 minutes. This 30 minutes time frame. This is where I got my demand zone. You can see the first demand zone. This is the first block of structure. That's BOS to the upside. Market did retraced back to this demand zone. It created the demand zone, pushed to the upside, creating another BOS. After the BOS, I moved down to lower time frame. That's where I got this demand zone. That's other block. Moving down to 15 minutes time frame. moving down to 15 minutes time frame, you can see the market did what? After this first break of structure, this is the first break of structure. Market traced back to this demand zone, mitigated the demand zone. After the demand zone was mitigated, market did what? Pushed to the upside again. That's continuation of the what? The uptrend. Market did what? Took out these highs, which is the another what? Break of structure. That's BOS. So as markets have what? Taking out these highs, showing that market is now what? Bullish. That's is still on what? Bullish trend. And waited for what? Retracements. Market did what? Created a what? A liquidity. This is an illiquidity inducement. You can see it. This was an inducement. So market did what? Created an inducement, pushed to the upside, then traced back to take out this what? Liquidity. That's inducement. Then mitigated what? This demand zone. That's how I what? Cut this what? This trade from here to what? To the previous what? Highs. And this was over 7 RR, that's 7.74 RR risk to reward ratio. That's the first one. The second one is what? This 101x. Let's move to over what? To this 101x. So this is what? This 100 watts 1s. According to this is the trade how we got what? This trade. This what? Over 6 RR. That's 6.81 watts risk to reward ratio. That's RR. Starting from what? Higher time frame. How I did what? The top down analysis. Starting from higher time frame, which is for 24 hours. According to this what? 24 hours. You can see what market is what? Is bearish. Can you see market is bearish from this side? So from this side, market is now what? Retracing to the what? Upside before what? Continuation to the downside. So this is what? Retracement on higher time frame. According to market structure, market is bearish, but market is what? Currently what? Retracing to the upside before what? Continuation. Because normally market cannot just start moving like that. Market must what? Retrace. According to market structure, market must what? Impulse, retrace, impulsive movements and retracement. That's how market moves. So market did what? The impulsive move. So I'm now expecting market to what? Retrace to this high before what? Continuation to the downside. So according to this market is what? Retracing on higher time frame, which is 24 hours. So since market is retracing on higher time frame, in a smaller time frame under what? 24 hours, which is daily time frame, it will be what? Uptrend. So moving down to 8 hours time frame. This is the trade. Currently this one is moving, but how I got this one is the one I want to show you guys. Moving down to 2 hours time frame, you can see market is what? Bullish according to market structure. You can see market is what? Creating the what? Highs, low, highs, low, highs. So this I was showing the market is what? Is bullish inside what? Inside the what? 24 hours time frame. This is what? Internal structure. This is what? Internal structure. Remember we have external what? Structure and internal structure. The internal structure is inside is this one, while the external structure is what? The 24 hours, which was downtrend, but currently market is what? Retracing to the upside. So showing that inside the internal structure, inside the what? The bigger time frame, there is what? Another trend inside the what? Bigger time frame. This is what? 2 hours time frame. Market is now bullish, but currently on 24 hours, market is what? Bearish, but doing what? Tracing to the upside. So the upside retracements on 24 hours is what? Bullish was movement on what? Lower time frame, which is 2 hours what? Time frame. So moving down to what? 2 hours time frame. And see market is bullish. So let's move down to 1 hour time frame. So on these are what? Currently this 1 hour time frame. There is a zone inside this 1 hour time frame. So inside this 1 hour time frame, can you see this zone? Can you see this zone? Market what? Did what? Broke to the what? Upside. This is the broker structure. That's BOS. Market did what? Pushed to the upside. Took out this highs, which is broker structure. Then increased back to this what? Demand zone. Can you see it? Market retraced to this demand zone. So I moved down to, I was waiting for what confirmation before what taking the trade, because definitely there's demand zone here. So I cannot just enter like that. I waited for what confirmation entry. So inside this trade, after the mitigation of this demand zone, I waited for what confirmation entry. Market did what? Market just pushed what up, showing the market is bullish after this what mitigation of this demand zone that has taken these highs. Then I waited for what retracement. The retracement was what from this zone. So this is the demand zone that I looked out for, the newly what created demand zone. So market did what pushed. That's the first what. This is the confirmation, the break of structure. Then I waited for what retracement to this what demand zone. That's when I sent it to the inner circle. That's the mentorship community. This is the what the break of structure to the upside. That is confirmation entry. Then I waited for what retracement. Market did what retrace as expected, mitigated the what demand zone, pushed to the upside, and I targeted what these highs. That's how I caught this what trade. This on the 1x, 100 watts 1x, and is over what 6RR. You can see it's 6.81 watts RR. So moving down towards the third one, which is on June 8th, that's jump what? Jump 75. So this what jump 75 that I caught over what 9RR, that's 9.5 watts risk to reward ratio. How did I cut this trade? Let's start from high time frame, which is our top down analysis, 24 hours. So on 24 hours, can you see the market is what is bearish? Can you see it? This is a bearish what trend on 24 hours, showing the market is what is bearish. So moving down to 8 hours, moving down to what 8 hours, you can see the market is still what bearish. Moving down to what, let's move down to 4 hours. On 4 hours, you can see the market is what still what bearish. So let's move down to 24 hours, sorry, 2 hours. So this is the 2 hours time frame. You can see it, market is still what bearish. So moving on to 1 hour time frame, I see the market is what is bearish, creating a what lower low, lower high. All these are what showing the market is what bearish. So how did I cut this entry? Move down to what 30 minutes. 30 minutes time frame. On 30 minutes time frame, there's one other flow that I saw. This is the first one. Can you see? This is what broke structure to the downside. That's bearish move. BOS to the downside. Market did what? It trace back to this what supply zone. This is a supply zone. That's other block. Market did what? Respected the what? The supply zone. That's pushed to the downside. We'll trace a little bit inside what? Inside the lower time frame that block. Afterwards, there is one lower time frame block of structure 2. Market did what? Broke structure to the downside. Trace to that lower time frame on that block. Market did what? Pushed to the downside, creating a what? Another block of structure. Afterwards, respecting this demand, sorry, this supply zone, market did what? Broke another structure to the what? Downside. That's when I set what my trade and sent the analysis to my what? To my community. That's my mentorship community and inner circle. That's VIP community. So this is the trade. Can you see? But I refined it to what lower time frame. This is the 15 minutes time frame. That's you can see the first zone was up was the first supply zone was respected. That's the first supply zone was what expected. Broke total to the downside. We trace back to what this inside what this what smaller time frame was, that smaller time frame was supply zone. Respected the what smaller time frame supply zone, broke total to the downside. That's when I marked out this supply zone. You can see it, this 15 minutes what other block. You can see the other block, and this is the liquidity. Sorry, the inducement. That's liquidity. You can see it. You can see market what broke of structure, twist and create what liquidity. That's inducement. Reduce back a little bit before what taking out the liquidity. That's taking out this what this liquidity inducement. Mitigated the what the supply zone and pushed to the downside. We targeted what we target what this low, this previous low, the market smashed the what, the TP. That's how what I caught this trade. That's over what 9RR, which is 9.5 what risk to reward ratio. That's the what the third trade. So moving down to the fourth trade, which is what jump, sorry, which is what on tens, this what 10 1x. That's volatility 10 1x. That's the trade. You can see the trade, guys. So this trade is what is the trade, and I sent this out to our what free channel on Telegram channel. You can check the link below on my bio and join the what the Telegram channel and get what some free signals from there. That's the free analysis setups. So this is what this 10 1x. I sent it out to my community free channel everywhere, and everyone enjoyed this ride over what 14RR. So that's starting. Let's see how I got this trade. That's how I get this entry. Starting from high time frame, as usual, you have to do your what top down analysis starting from 24 hours. So this is the 24 hours time frame. The 24 hours what time frame. I did what? Market is what bullish. You can see all these are sign of what market is bullish. So currently market did what? Broke structure to the upside, retreat back to one what demand zone. This is the demand zone. Now market did what? Mitigated recently. So since market retraced and mitigated the demand zone, that has respected what? The demand zone. Since market respected the demand zone, I moved down to what? Lower time frame, which is what? 8 hours. That shows the market will now what? Continue with the what? The bullish movement. That's the uptrend. So this was what the higher time frame was demand zone. So market mitigated the demand zone, started facing a what a higher high, higher high, higher low, higher high. All these are what signs that market is now what bullish. So moving down to 4 hours. So it is the 4 hours time frame. You can see market is bullish. So the 2 hours what time frame. You can see market is what is bullish. That's at this zone, at this particular place. So this is the first one. The first one. You can see the first one. First was break of structure to the upside. That's bullish trend. That's higher high, higher low. Market did what pushed to the upside. Broke structure to the upside. Shows the market is what bullish. Retraced back to this demand zone. That's mitigated the demand zone, respected the demand zone, pushed up again. Creating a new what BOS. First BOS broke of structure. Market did what retraced back again, mitigated the what the demand zone. That shows that what market is too bullish. That's the first break of structure, first break of structure, the second break of structure, and the first what respected zone and second respected zone. That's when I was I now started looking for what lower time frame what entry. That's how I can jump from like how I can what join this what this trend. That's the bullish what right to this highs. So moving down to lower time frame, which is 30 minutes. So moving down to the what 30 minutes time frame, you can see the break of structure. You can see the break of structure. That's let's move over towards lower time frame, which is the 15 minutes zone. So on the 15 minutes time frame, market did what? This after the break of structure, market did what? Created what? Inducement. That's liquidity. Pushed to the upside after a long time. Market did what? Retrace back to take out this what? Inducements and liquidity. That's when I sent this trade out to this what to my inner circle and mentorship community, even the free channel, that's the free Telegram channel, even on my Twitter, everywhere. I sent it out for everyone to ride on. So market did took out this liquidity, mitigating this demand zone and pushed to the upside and targeted this previous highs. This over 14RR. You can see it 14.88 watts which to the word. That's 14.38 watts RR. That's how we got this trade. You can search the link on my bio and join the free Telegram channel to enjoy the free signals. So the The last one is what is on jump 10, which is on 11th of June. That's when I caught the trade on 11th of June. That's jump 10. I caught over what 6RR. Let's move over to what jump 10. So this is what the jump 10 I caught. Can you see it? So these are the supply zone I sold from. I sold from what this supply zone, this other block. So I sold from what this other block. So how did I cut this trade? Moving from that's doing I did what my top down analysis, which is starting from what 24 hours time frame, which is daily time frame. This is daily time frame. So you can see on daily time frame, market is what bullish, creating a what a higher low, higher high, higher low, higher high, higher was. Market now was retracing back to what to create a higher low before what continuation, something like this. That's to what to continue what the bullish was move. Market is creating what a higher high and higher low. So since market is now retracing back on higher time frame, which is daily time frame. So moving down to lower time frame, you will see that market is now what bearish. So let's move down to 8 hours time frame. On 8 hour time frame, that's this place, this particular what place, market is bearish, you can see it. So moving down to 4 hours time frame. So moving down to 4 hours time frame, you can see market is bearish at this particular place. So let's move down to 2 hours time frame. So moving down to 2 hours time frame, you can see the bearish movements. So let's move down to the 1 hour, the place, that's the particular time frame that I caught the trade. So this is the trade. I sent it out to my mentorship community. Even my student asked me to do this analysis for him, and I did it immediately. We all took the trade and we enjoy it. That's a quick 6RR, that's 6.28 RR to the world. So this is the first place. You can see the first break of structure. That's the break of structure to the downside. That's BOS. Why did retrace back to this supply zone? That's other block. After the retracement to the other block, why did respected the other block, pushed to the downside, creating a new BOS. That's break of structure. After the break of structure was created, market did created an inducement. You can see this inducement. This is an inducement, and some people was busy selling at this particular place. But I know that market this is an inducement. I even told my student that this is an inducement, that we should wait for this zone. Even my students that said I should do the analysis for him. So this is the trade. So after this, I sent this out to my mentorship community, and even my students, the one that said I should do the analysis for him. So this is the demand zone, the supply zone I sold from. So after the break of structure to the downside, this is the break of structure, that's BOS. When it was pushed, taking out this high, that's this liquidity or inducement, indicated the demand zone. Indicated the supply zone. This is the supply zone. Market tapped in with sniper entry. Sniper entry, pushed to the downside. We targeted this low. That's how we cut this trade over 6RR. That's 6.28 risk to reward ratio. So guys, see you next time. Make sure you like, subscribe, and comment.